Hello and welcome to the Power of Passive Investing. We have a very interesting guest today, someone that I've known for a long time, but haven't had the pleasure to interview yet. It's Adam Glover. Adam, welcome.
Thank you so much for having me. Yes, we have known each other a long time, so it's a real pleasure to be on the show. Thanks for asking me.
Awesome, awesome. And Adam, why don't you start with sharing with our listeners a little bit about yourself, what you've done? And I realize that it may take more than a little. Please go ahead because you have an extensive experience and I want our audience to recognize that. So.
All right. Well, thank you. It's actually my favorite topic. So I could talk about myself for hours, but I'll try and keep it slightly brief. Uh, where do I even start? I've been in real estate for a very long time, Alina. When I came here first, I started, well, actually, my family was involved in real estate development in England. So this goes back a very long way. So that was something that I always saw kind of peripherally as a child growing up.
Mhm.
And I started my career pulling wires for an electrician. I used to knock on doors and say, I'll do anything for $5 an hour.
Wow.
And I ended up being hired kind of full time by this electrician. So I pulled wires and crawled in basements and in attics and battled with dust and mice and spiders and all kinds of things. So I really got hands-on experience, which was very valuable, actually.
I'm sure.
Uh, Short-circuiting this, though, I ended up raising a lot of money. I was hired by a ground-up multifamily shop in Southern California, and I raised a lot of money from Japanese investors, primarily in the 80s. Then the market collapsed. There was the
Yep.
savings and loan crisis, and the Japanese economy also tanked.
Mhm.
So all that went away, and I ended up going to Japan, where I learned to speak Japanese fluently, and was hired by Universal Studios, actually a JV between Universal Studios and Paramount Studios, to run their real estate division in Asia Pacific, based in Tokyo.
Incredible.
So I pulled together a $400 million fund, bank fund, actually, together with
Wow.
the investment from from the studios, and went to town developing real estate across Asia Pacific, particularly in Japan. Once that had finished, I came back and I started working on my own account, developing my own projects, and in 2007 sold out. I got lucky. I was worried about the market. I know you and I have been talking a lot about
Yep.
going to cash. So that's certainly something we should talk about today. I know it intrigues you, this perspective. So that's something we should talk
Yeah.
about. But anyway, I decided to, I sold out and I was hired by a major bank.
Mhm.
So I saw it was the major period of just, of collapse. The global financial Lehman Brothers, the end of 2007, just changed the world, really. And I was brought in by a major bank, the C-suite level, to help them clean their balance sheet of non-performing real estate collateralized loans. So I did about $1 billion worth of those. And before moving on to Colony Capital. Colony had done a lot of deals with the FDIC,
Mhm.
and had bought a lot of about $7 billion of non-performing loans from failed banks.
Mhm.
And so my job was to do workouts and divestments, primarily in portfolios. Whereas at East West Bank, I had worked on individual assets, so I got to know them individually. At Colony, I worked on portfolios. So I've had two very major experiences during downturns that have shaped my view of the real estate world. In the last 10 years or so, I've been building digital marketing system, best of class digital marketing systems for sponsors so they can raise more capital, find more accredited investors and raise more capital. That business has become incredibly difficult today for various reasons, and I'm happy to talk to you about why. Whatever you want, the agenda is now yours. That's it in a nutshell.
Amazing, and thank you, Adam, for keeping it brief. I know it's hard because your background is very, very diverse, very extensive, and you've certainly done a lot of great things. Before we dive into the topic of interest for today, which is digital media and raising capital and the challenges associated with it, I wanted to briefly touch upon one of your past experiences of selling non-performing notes, because I think you may want to reconsider sharpening your skills in that area. That may come in very, very handy very, very soon as well. Have you thought about that at all?
I can't, so um, okay, so I'm going to pivot to something. So hold that thought because I'm going to forget it.
I am holding it.
Hold that thought, and I will come back to it as soon as I finish this. But I've actually been thinking about this a lot over the last 24 hours or so. And that is, how do you deal with considerable uncertainty as there is at the moment? How do you deal with that? How do you deal with problems, resolving challenges that you have in any aspect of life,
Yep.
particularly in business? Now, well, they're basically my experience or the way that I've approached it, my career, is there are two different ways of doing it. And I actually learned this in high school electrics. I can't even remember why. It must have been physics or something. There are two ways that electricity moves. One is in sequence.
Mm-hmm.
So it's a string. So the first one lights, the second lights, the third and the fourth, and so on. It's a string. Or parallel circuits where you turn it on and everything goes on at the same time.
Yep.
I've always thought about the way that I deal with solving problems in the same way. You can either deal with solving a problem by dealing with it in sequential order. In other words, here's a solution. Let me try this solution and see if it works. If it works, I'll go with it. If it doesn't, I'll move on to solution number two and see if that works. That's the sequential approach. The
Sure.
parallel approach, which is the one that I take, is where you attempt all solutions simultaneously. Now, I like that for various reasons. One, it just it over it 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 helps you overcome the sense of um, overwhelm by a problem that you have to deal with by creating an entirely different environment of overwhelm, right? So if you're attempting every different solution simultaneously, you don't really have time to worry about the problem, right? You're trying everything that you've actually got an ad. You're trying everything at the same time. What I find happens when I do that is that having been in a situation where I'm struggling to figure out what to do next, I usually end up very quickly with a new problem, a vast array of really good options. Because if you go in parallel, some of those are going to work. Surprisingly, they will work, and then a lot of them will hit at the same time. Okay, so back to your question, which was, have I considered note buying again or trading? It's a very complicated asset class. It's not an easy one to get into. I kind of got lucky. One of my investors, when I sold out in '07, one of the investors in one of the deals that I sold was on the board of East West Bank, and he knew that the bank was having challenges, and so he brought me in or introduced me to the chairman who hired me, not quite on the spot, but whatever, that's a whole different story, but hired me to help clean their balance sheet. And
Sure.
I'm just going to make a long story longer. It was kind of a cool day, actually, because I'd been looking to buy notes from banks. Like, how do I buy notes from banks in those days? And they were all dead silent. They didn't want to talk. You'd send them emails or call them or faxes in those days. I'm interested in, if you got anything for sale. No one answered. So I walk it, but I knew there was a lot of opportunity. So I walk into this new position, and the chairman actually toured me around the sixth floor with introduced me to the C-suite and everything.
Yep.
And the next thing he did, Alina, was he literally came into my office with a piece of paper and there were about a dozen notes on it. Different
Incredible.
asset, a multifamily, big box. There was some self-storage, some warehouse, some industrial. It was a whole bunch of stuff. And it was like I'd hit the jackpot. I could not believe how lucky I was, having been searching for these, and the guy just walked in and given them to me. So, okay. So what I learned though, and I'll try and keep these short, but I do keep going on a bit. But uh, what I learned from that experience is that one, you've got to have an inside track,
Of course.
to a bank. And there are a few shops that are still out there, still trading notes. But on the buy side, it is very different from buying hard assets. When you buy a note, you're buying the debt, and you got to figure out how you're going to get to the asset.
Yep.
And that is a very different form of underwriting than you do. Oh, it's actually an extra layer of underwriting that you have to add before you can underwrite, or at the same time as you underwrite the value of the asset. Anyway, I kind of like
Speaking of uncertainty, right? I'm sorry, I'm interrupting, but that you mentioned the uncertainty earlier. There is as much uncertainty as you want in this type of business.
uncertain. Well, it's just
Yep.
challenging because you don't you got to decide: am I going to foreclose? Am I going to pursue personal guarantees? What happens if they go bankrupt? Are they siphoning money away from the deal because they're not paying you and neglecting maintenance? And it's just it, you can get some enormous wins. There was one note I remember I dealt with. It was we sold. Well, actually, I was on the buy side, but we looked at it. It was a $5 million note, and there were personal guarantees on it. The owners were old and they didn't want headaches. So they just they gave us a deed in lieu. So we got the note. It was $5 million. We got a loan from the bank. So we only had 1 million into it. The bank lent us 80%. And it was an entitled piece of land in Malibu that we sold for 20 million. I mean, it was just a
Incredible.
home run. But but you didn't know. They could have gone bankrupt and you could have spent years in courts, right? But you never know before.
So that's where your rule of electricity came in. You went with the parallel rule of electricity and tried multiple angles at the same time and see what sticks,
Well,
basically.
that's what I'm doing now. So that's my answer to your question. Am I thinking of notes? Yes, but only peripherally because it's very difficult to get in. I would love to go back to a bank that has a huge portfolio of distressed assets and start selling them again. But I'm on a different side of the business now. So looking at all kinds of other ways of navigating the market today.
Makes sense, Adam. And actually, when you mentioned the parallel rule of electricity and the reasons behind why you're using it, I was thinking from a very different perspective. I was thinking because we live in a world where the answers that produced instantaneously by various chat GPTs of the world, whether it's Perplexity, chat GPT, and whatnot, and so forth, we as human tend to try to kind of run in parallel and think as fast as the machine. So we are now wanting to get the answers yesterday, as all of the New Yorkers would love to say. So that's why you're trying different things in parallel and seeing which one is going to respond sooner to my problem, so I can run with that response. So that's how I was thinking about your decision making strategy in terms of applying the rule of parallel to various business ideas. That's
Yeah,
just
yeah, exactly. Just looking at like how do you deal with the market today? I think you have to be creative. At
absolutely.
least I do. You got to be creative. You can't sit in a corner being puzzled and ponderous. You have a general thesis, and this is something you and I have chatted about online a little bit. You have a
Yep.
general thesis about where the economy is going or how commercial real estate is evolving. And based on that thesis, you apply strategies for dealing with it. All right, and there's all kinds, but you have to pursue. I think you have to pursue all approaches because you just don't know how things are going to evolve in the future. Well, look, we're sitting here today. I don't know. I don't want to date stamp it, but in 2 hours, I think we're going to have, an announcement from the White House about tariffs that is hopefully going to bring some certainty, at least to, okay, what direction are we going in? And now we can start to figure out, okay, how do we deal with this new environment? Up until now, there's just been uncertainty. So what the markets are looking for is certainty so that we can plan.
That's for sure. And I'm sure we will see markets' reaction to that decision as well. But that will be the topic for another interview because at that point, we'll hopefully have some sort of path that we're all proceeding. Until then, let's talk about the problem at hand, or one of the topics we briefly chatted offline, where you said that you've been building your digital marketing, digital media business for the last 10 years or so. And it certainly has evolved tremendously in the last few years with the growth of the LLM and AI usage in general.
Mm.
Um, we talked about how much more difficult it is to raise capital these days. And knowing that this has become your expertise in the last few years, I would like to tap into that expertise
Sure.
and hear your perspective. What do you think are some of the best tools these days to help raise capitals, whether it's the sponsors themselves or capital raisers, and how these tools should be applied strategically so that you can expedite your progress and sort of get faster to the finish line?
Yeah. Okay. Really good questions. So this is okay. So first of all, it's very difficult to raise money at the moment for some obvious reasons. The primary one is that over the last few years, there's been a lot of distress, particularly in multifamily, and so two populations, if that's the right word, have suffered. One is new entrants as sponsors that have come in and have no experience, taken on too much debt and are losing properties.
Oh,
So
yeah.
they're learning the hard way. And everybody, well, not everybody, but you go through it. It's inevitable. First time entrance. So they're learning the hard way about debt and capital stack and, how to underwrite. And then you also have this audience of investors who have never had the opportunity to invest before, who have come into the market with promises from sponsors and capital raisers that, this is the pathway to financial freedom, passive income, and building wealth. And it's all super easy. And you're going to make 25% a year. And all you need to, and it's all passive. You don't have to worry about toilets until the deal goes in the toilet and then you lose all your money. So these two groups of newcomers to the industry are really learning the hard way what happens when there is a downturn. So that's why it's hard to raise capital at the moment because a large number of people who bought into the idea of investing in real estate have been burned. So you're running against those headwinds. But there are a couple of other reasons why it's challenging to raise money at the moment. Well, actually, but okay, let me rephrase that. But there are ways to be effective. And in the same principle of testing new ideas, like, okay, why is it so difficult? We probably spent over $1 million, which isn't very much, but at least in our little world, it's a significant amount of money on Facebook ads alone. And what we found is that the quality of the leads that you get on Facebook are appallingly low. You got a 2% conversion rate, and you only got a 2% conversion rate if you have a really good online platform, meaning website and online presence that your prospects on Facebook can research. Right, so you got to have that in the first place, and you have to call every lead, like literally pick up the phone and capture them as soon as they submit a form. If you do both of these things, you will, if you're lucky, have a 2% conversion rate, which is very,
Sounds
very low.
very
So
amazing.
we were looking at this last year and just thinking it's got to be a better way. Plus, Facebook is a pain to deal with as well. It's just Meta is God knows what the hell's going on over there. So I decided to have a look at LinkedIn and a short story. on that is that having spent an enormous amount of money on training, actually, because I didn't really know what I was doing. I mean, we had a good system in place and it worked well, but I wanted to upgrade. So I went through some training and then I created my own system. I picked out the best practices from all the training that I took and focused them on how to raise money for commercial real estate, what works the best. And I've found over the last now 8 months, massive success in that. This gets back to one of your questions. So I'm going to let you bring that back up if you remember. But there is one thing that's very, very important on LinkedIn, and that is authenticity. So this is back to this idea of AI and the use of AI and the leveraging of technology. One of the biggest problems for capital raisers such as me, who deals primarily with multi-cycle seasoned high AUM sponsors, right? Seasoned professional or seasoned real estate professionals, is that there is an enormous influx of new capital raisers. And those capital raisers learn from massive conferences, right? They come away with books and whatever, files and files of templates that they then pump through AI to create duplicates of. And so what you end up with is a flood of like, and we've talked about this, like sounding content that really doesn't differentiate you from anybody else, but it's noise. And so how do you elevate yourself above that noise? Well, there's one answer to that: authenticity. Authenticity, like this chat that we just had about parallel versus sequential thinking. So that is an interesting perspective. It's not unique to me. Now you know it, so you understand the idea, and I'm sure others have had it. But to write about that is is again not unique, but is very much consistent with who I am, how I see the world, and so I'm going to write about that and talk about it on LinkedIn. So, how do you identify? The way to stand out is to identify who you really are, how you really think, and write about that. That is what will attract people, and that's what helps you elevate yourself above the noise of AI duplicated templates.
Adam, I love how you think. It actually reminds me of a post that I saw either yesterday or maybe a couple of days ago. Someone on LinkedIn made a post saying that almost all of the post responses, comments, are very identical. And I responded to the gentleman saying, have you thought about the posts themselves? Have you thought about that maybe it's the posts that are
Ah.
very identical? That's why the responses are so identical.
That's a very good point. That's very funny, actually. You're quite right. You wonder why everyone's making the same, because you're writing the same thing every time. That's why.
Bingo, bingo, and yeah, the way you explain stuff reminded me why I appreciate and enjoy your posts. Number one, it's authenticity, and number two is your dry sense of humor, which I love and adore.
Thanks.
People may not be into that, but I do appreciate your sense of humor in general.
Thank you.
That comes out in your posts,
Mm.
which is very intriguing. So back to our topic at hand for today. You said that you found this way of having a success of raising money on your platform of choice, LinkedIn. Maybe for other people, it's
Mm.
Instagram or TikTok and so forth, but for you, it's LinkedIn. And you primarily help sponsors that have a significant track record and have been around the block at least one time or maybe multiple times and seen the environment that we're going through today.
Right.
So, um, what is it? What kind of approach do you take with these sponsors, or what do you teach them that makes them stand out, that helps them to differentiate themselves on LinkedIn and makes their capital raising successful?
Yeah. So what? so our process, when I say our, I mean my process, but I'm using the kind of the royal we over
Sure.
here, right? So,
Feel free
our,
to do that. I speak Russian, so royal we is very close to me because that
right,
royal.
exactly. It's a very English concept as well. So, but from any kind of monarchy, I guess,
Yep.
eventually, right. Um, so, so the process that we undergo with our clients is basically, like you're interviewing me, I interview my clients. And I start with a high level, who are you? What's your background? What's your investment thesis and philosophy? And that's an initial conversation. And I pick out of that conversation topics that I know will resonate with investors. So, a good example of that is, or one that I like to use, is the IRR. So, often you'll hear somebody very dismissively, and in a kind of that initial conversation, they might say, "Oh, yeah, we hate the IRR," and then they'll keep talking. Okay, note taken. Now, next week, and this we do over a period of between 3 and 6 months, depending on how fast somebody wants to get to market. But each week I'll have a conversation, usually about 45 minutes, with the client, interviewing them on these topics. Okay, so the client might say, we hate the IRR. Okay. Next week, we're going to focus the entire conversation on why. What is it that, why did you say that? What has your experience been? Why don't you like it? How do you understand that concept and how do you integrate how do you deal with the common use of the IRR in projecting returns that investors lean into? How do you deal with that when you're raising money? Like, how do you address that if it's a concept that you don't really like for whatever reasons? And why don't you like them? When you do that, what I'm doing, I used to think of it this way, but also, I suppose I still do, is that you're extracting the DNA of somebody. Like, you're bringing out of them their true perspective of commercial real estate. And that is what is authentic. That's real. And that's something, it's very easy when you're a professional in an industry, and you know this, you're from IT, so you've had these conversations as well. You can easily have a conversation with somebody where you pepper the conversation with terms of art, jargon, and terms that you understand because they're commonplace. And you don't think that your listener has no clue actually what these terms mean, right? So, how do they know? And so, one of the biggest handicaps that seasoned sponsors have is they don't realize how good they are and how expert they have become. And so, they tend to talk to people in language that actually investors don't really understand. So, what I do is I help them draw out those ideas and explain them. And then we put them on their website and we condense those ideas into LinkedIn posts that we post on LinkedIn for them or they post on LinkedIn. Now they are speaking with deep authenticity. And the big advantage to that, he said, picking up his phone as a prop, is that when somebody first hears about you, what are they going to do? They're going to run your name on LinkedIn, I'm sorry, in Google, probably, even today. And two things are going to pop up. Hopefully, your website and then your LinkedIn profile.
Yep.
And so they're going to drill down on that and do research. And so if you've done your job properly by putting out your investment thesis and your view of the world in detail on your website and on LinkedIn, your prospects can learn who you are and do research on you super efficiently, super quickly. So when you have first contact with them, they're not asking you, who are you and what do you do and what's your track record? They're asking you, when is your next deal? I want to invest.
That's very true. It does come naturally. It does take time to get to that point. It doesn't come overnight, of course. But I agree with you in terms of being authentic, which I find to be a lot more difficult these days because, again, a lot of us are speaking to very similar pain points, because guess what? Regardless what industry you're coming from, what your background is, if you're talking about real estate or a topic, your pain points are going to be pretty much identical. You just need to pick a different angle. Like, I'm coming from real estate, maybe I'll compare it to IT terms like iterations and sprints and so forth. Someone coming from medical field will compare it with the emergency room and so forth. But at the end of the day, the pain point is going to be one and the same in real estate that we concentrate on. So knowing that, and keeping in mind your advice about being authentic, posting authentically, there must be another component or maybe multiple components in addition to posts. Maybe it's an outreach, maybe it's a DM or something else. So take us to the next step.
Oh, you were back to LinkedIn, LinkedIn
I'm back
focus.
to LinkedIn. Yes,
Yeah.
let's
Okay.
jump down into the
Okay.
story.
So I actually really enjoy LinkedIn. I'm really
I can
having a good
tell.
time with
I
it.
can tell from your posts.
I enjoy writing the posts, and I spend actually a lot of time on them. I'm really getting into it. We should talk about what's the point, which was your question before we started. So let's do full circle and come back to that. But so the other things that you should be doing, first of all, basics. You want to be posting authentic content. I do it every day, 5 days a week. I don't post on the weekends. And then before you post, half an hour before you post, you want to be commenting on ideal prospect posts. So identify who your ideal prospects are, create a list, and 30 minutes before your post goes out, find out who's posted in the last 24 hours and comment on their post. That's going to start elevating your visibility very quickly as people look at your profile and whatever. It elevates you. Then your post pops and more people see it because you've been active. So now the next half hour, you want to spend continuing to comment on other people's posts, target audience posts, while responding to comments on your post. So that's kind of in a nutshell the main process. The key to that, though, is identifying your target market. Who actually are the people that you want to be visible in front of? And that's a whole process in itself. And I change that up all the time. Then what I have found happening, Alina, seriously, it's almost overwhelming what's happening. And I'm looking, I cleaned out, I've got my LinkedIn open here. So, oh, I've actually got a post here. You know what? I need to open. I'm right in the middle. When we started, I was right in the middle of answering something. So I cleaned out all the people. So I have in order to connect with me, if you're on LinkedIn, if you're not connected, you'll see the button that says follow. So you can follow. If you want to connect, you have to click, click, click to do that. And there's an option in LinkedIn that says connect or follow. So I went with follow, so it's just a single click, but you can still connect. So I cleaned this out yesterday, Alina, seriously, or this morning before I started. I've got another 39 invitations to connect since I don't know what time is it, like within the last 4 hours. Yeah, in the last 4 hours, another 39 people have made the effort not to follow, but click, click, click. They want to connect. It's overwhelming. The number of messages that I get is crazy. Whenever somebody, by the way, that 30 later today, so it takes time. Later today, I will respond to every single one of these 39, now 40 invitations to connect with the message, thanks for connecting, or thanks for the invitation to connect. Happy to accept. How can I help you? That's all I send back. And that is what helps me and it's like I've got it I just copy and paste that. I've got it in an email. So I go into my email, I grab it, and I just copy, paste, copy, paste. It just doesn't take long. It's grunt work. It doesn't take long, but it's worth the effort because it is through that effort that I can screen this incredible volume, get identify who's going nowhere, identify who should be attending my next LinkedIn mastermind, or who should be attending the next capital raising mastermind, or who is an investor, and and then send them in different directions to follow up with later. Very, very effective. But you asked me a question earlier, didn't you?
Amazing. Well, you answered it indirectly that through this process, you sift through your connections. I asked you if, in addition to making posts, you do any outreach yourself. In other words, just like you getting 40 DMs, do you send or do you advise your clients that
Ah,
are capital raising to send DMs or do anything else on LinkedIn or maybe even use Sales Navigator?
yeah. So I was sending. So best practices apparently are to send 10 DMs between 10. You have a limit of 100 a week, so 10 a day. Well, over 20 a day if you've got doing 5 days a week. To send outbound DMs to target prospects. But I got dinged apparently. And I got a notification from LinkedIn that I'd violated T&Cs and my requesting more DMs was on hold for a week. I was in the penalty box.
Interesting. Did you overdo? Did you send more than 100?
Uh, so what I think happened was I ran some LinkedIn lives.
Okay.
When you do a LinkedIn event, sorry, a LinkedIn event, when you do a LinkedIn event, you are allowed to invite 100 people a day. It's like a big thing. This is one of those, you don't figure this out, all right? You do, like I say, I spent a lot of money on training. And somebody said, yeah, 100 a day, you could do events. Okay, brilliant. So I set up some events and I did it. And I sent out 100 a day over a 3 week period ahead of the event. Well, that was effectively the same as inviting making a connection request, and that's what dinged me because only a small number signed up. So now I had this huge number of people that I'd invited to connect who hadn't. So that's what did it. So to answer your question, I stopped. And
Sure.
frankly, I mean, there's just the speed at which I'm getting new inbound. It's almost as though I don't really need to be doing outbound. I mean, I could if I wanted to. I never really found the outbound to be particularly effective either. I mean, what do you say? The best thing is to, I don't know. I mean, one message that I said that worked quite well was, I saw one of your posts. It's really good. Can we connect? So I see more of your posts in my feed. Okay. So whatever. But
Better than the bot post, bot response. So I guess it's okay, like you said.
it worked okay and it felt okay to me. It wasn't, whatever. You see a lot of these canned
Yep.
things going on. So anyway, I've stopped doing outbound, please connect. Unless it's somebody I really, whose email I want. Actually, in most cases, I need an email address. So I connect with them, and once they connect, then I can get their email and write to them.
Adam, you actually have the best of both worlds because most sponsors and capital raisers that are trying to raise money on LinkedIn would love to have inbound leads as opposed to reaching out themselves. And in your case, the a lot of the success, or as you called it, overnight success, is attributed to many hours of work and many dollars spent on numerous intensive trainings and digesting all that information and actually perfecting your post to the point where now people are reaching out to you and perfecting your strategy. I had a follow-up question on your strategy. You mentioned that you comment half an hour before on the people that are active on LinkedIn, but may not necessarily be your ideal avatar, just people that are active in your network, so that you can have them do the same for you. Sort of when they see you post, they start responding, and the post picks up and is seen by many more people, which makes sense. But then after that, when you start responding to their comments on LinkedIn, you are also re yeah, I think you said you're um, reaching out to your avatar. And that's
Okay, so let me clarify something. I think maybe I didn't quite explain it right. I do not comment. I only comment on my my ideal avatar's post. So this is when Navigator comes in. It's not necessary. You can hire a VA to do some scrubbing, which we actually did recently, only because I got this huge list. One of our clients sent us a list of 1,100 people that somebody had given to him as a teaser, and he wanted to blast it. And I said, don't do that. But
yeah,
what we did, what you can do in Navigator is you can run fairly focused searches. So, I mean, it needs to be a little bit more refined than this, but let's say you're looking for accredited investors. So you run a search for accredited investors. And what LinkedIn allows you to do in Navigator is see if they are active on LinkedIn. Did they post in the last 30 days? So that's what I do. I create lists of ideal target um, audiences, my avatars, and there are a lot of them, um, that are active on LinkedIn. There's no point putting a list together and then waiting, hoping that they're going to post. So you want them to be active. But so everybody I approach are an avatar of some sort, not approach, but comment on. They're all somebody in a network that I have a particular agenda, hidden agenda for in the background. Yeah. So it's not random, it's highly focused.
amazing, amazing. Yeah, great strategy. Certainly very customized, and you're the proof that it is working out well for you and your clients. So I
Mm.
commend you for that. Adam, it's amazing interview, and I would love to continue for a couple more hours, but we'll probably do it at another time,
Okay, sure.
because there are numerous topics that I would love to cover with you and hear your point of view. But at the end of each interview and at the end of this amazing interview, we typically ask our audience two personal questions. First one is easy. Uh,
Okay.
if someone wants to connect with you,
Ah,
what is the best way to find you and how to find you?
thanks for asking that question. So obviously LinkedIn is a good place to find me, but also my website, which is gowercrowd.com. That's my last name, Gower, gowercrowd.com. Sign up for my newsletter. There's a subscribe button, and the first email you get from me, reply to it. And you can always unsubscribe. That's the best way to get hold of me.
Amazing, amazing. And second question, which is not tricky, but a little bit more involved, we typically ask our audience, how do you like to give back?
Well, it's an interesting question. First of all, I'm very philanthropic. So I try to write checks as close as I can to 10% of income every year. So I try and do that.
Thank you.
Um, but I everything I do is because I really like helping people. So I just enjoy doing that. When people ask questions or they want advice or guidance, uh, then I just get personal joy out of providing help to people to help them move along in some way. And the feedback that I get is so rewarding, when you help somebody in business in some way that yeah, that's what I do. I try and help people with everything that I do. And on a more practical basis, I write checks. Can I tell you?
This is excellent. And Adam, I am the proof that you are very, very grateful with your time. I know that you've helped me a lot, and we did have numerous conversations and discussions, and you've given me a lot of very constructive and right on point feedback in the past. And I want to thank you for that. And I'm
Oh,
sure
you're welcome.
many others would say the same thing about you. So really appreciate your expertise, your feedback, and like I said, your sense of humor. It still truly amazes me on a regular.
Thanks.
Thank you for that. It's been amazing interview, Adam. Thank you so much. And I guarantee to our listeners that we will have Adam back and we will cover more topics in the future. Until then, have a great day. Thank you.